It's one of the most talked about, most debated, and let's be honest, most volatile stocks in modern history. We're talking about a company that has completely shaken up an entire industry and created armies of both true believers and total skeptics. So today, we're going to break down the incredible roller coaster ride that is Tesla's stock from its days as a tiny startup to becoming a global titan. All right, let's get into it.
Would you believe it? This is where it all started. $1.59. That was the split-adjusted closing price for a single share of Tesla on its IPO day back in June 2010. Now, split-adjusted just means that's what the price would look like today, after all the stock splits they've done since. Back then, it was a tiny speculative bet on a company trying to do something pretty much nobody else thought was possible.
And that really brings us to the billion-dollar question, or I guess trillion-dollar question, doesn't it? How on earth did that $1.59 gamble morph into a company that would one day be worth more than almost any other on the planet? Well, that journey is just a masterclass in massive ambition, huge risk, and some truly radical innovation.
To really get our heads around this story, we're going to break it down into 5 key parts. We'll start with that initial gamble, then move through the brutal fight for survival and scaling, then we'll hit the absolutely massive 2020 explosion, look at the recent challenges where growth meets gravity, and finally, we'll check out the next big bet that could define its entire future.
Okay, so let's rewind all the way back to the beginning. When Tesla went public, you have to understand this was not just another tech IPO. This was a wild, high-risk bet on an idea that was completely unproven in a market that barely even existed. In those early years, the challenges were just immense. I mean, the electric vehicle market was practically a science project. Sales were tiny, pretty much just the expensive, low-volume Roadster. Profitability, that was a distant dream. And the whole time, the company was just burning through mountains of cash to build factories and develop battery tech. The stock price totally reflected that uncertainty, too. It was a real gamble. All right, this next phase, it was all about one thing and one thing only: survival. Could Tesla actually go from being this niche, luxury car maker to a company that could build cars for the masses? This was the period that was going to make or break the entire company. And this timeline, man, it just lays out the climb perfectly. The launch of the Model S in 2012, and then the Model X. Those proved they could build truly world-class cars. But the Model 3, that was the real test. The company went through what Elon Musk famously called production hell in 2018. Pushing itself to the absolute brink to get manufacturing up to speed. But by 2019, with the Model Y on the scene and the critical Shanghai Gigafactory running, you could feel they had finally turned a corner. Now, what's so fascinating here is how you can literally see the market's anxiety in these numbers. In 2017, everyone's excited about the promise of the Model 3, and the stock jumps almost 46%. But then, in 2018, deep in the trenches of production hell, it barely manages a 7% gain. It shows you just how much doubt was baked into the stock price. The dream was there for sure, but the big question was, could they actually build it? And then, 2020 happened. And this wasn't just a good year, it was a truly historic turning point. All those years of struggle, of investment, of risk, it all suddenly paid off in one of the most dramatic stock surges the market has ever witnessed. Just look at that number, over 743% in a single year. So what lit the fuse? Well, the main thing was that Tesla finally achieved a full year of profitability. It proved the business model worked. But that spark landed in a market that was full of rocket fuel. You had super low interest rates and this huge boom in everyday people trading stocks. The dam of investor doubt just completely broke, and the floodgates swung wide open. And pouring even more fuel on the fire was a 5-for-1 stock split in August of that year. Now, a split doesn't actually change the value of the company, but what it does is lower the price of a single share, and that makes it psychologically and financially way more accessible to a whole new wave of investors who just piled in. The final piece of the puzzle came in December 2020, when Tesla was added to the S&P 500 index. This was a massive stamp of legitimacy. It's like being called up to the major leagues. It forced every single index fund that tracks the S&P 500 to go out and buy billions of dollars worth of Tesla stock, creating this huge, constant demand. And the result of all that momentum, by 2021, Tesla had joined the ultra-elite club of companies with a $1 trillion valuation. Think about that. From a 1.59 gamble just over a decade earlier, it had become one of the most valuable companies on the entire planet.
But you know how it goes. What goes up can also be incredibly volatile. So let's get into the most recent chapter, where Tesla's massive size and a changing market have thrown a whole new set of challenges its way. It's facing what they call the law of large numbers. It's just a lot harder to grow at a crazy pace when you're already a giant. I mean, just look at this whiplash. A brutal 65% drop in 2022 as the whole market got scared and some company-specific issues popped up. Then, a massive rebound of over 129% in 2023, followed by another strong year. This is not a stock for the faint of heart. Its fate is now tied to big things like interest rates and, of course, a lot more competition. And this chart right here, this shows a key reason for all the recent turbulence. For the first time since the early days of the pandemic, the company actually reported a year-over-year drop in how many cars it delivered in a quarter. As you can see, Q1 of 2024 was down from the same time in 2023. The bottom line is this: the era of automatic, exponential growth is facing its first real test. And that test is coming from the titans of the old auto world. Now look, Tesla still has a powerful edge in its EV technology, its batteries, and its amazing charging network. But the legacy automakers are finally waking up, and they bring decades of manufacturing know-how, huge dealer networks, and incredible brand loyalty to the fight. The EV market is definitely not a one-horse race anymore. Which brings us right to today, and the huge debate about what Tesla really is, and what it's going to become. The next chapter of this stock's wild story really hinges on the company's next big bet. The bull case, the argument for why the stock could go even higher, is that Tesla is just getting started. The idea is that its future isn't just about selling more cars, but about cracking the code on full self-driving, launching a fleet of robotaxis, building humanoid robots, and growing its massive energy business. If even one of those big bets really pays off, the potential is just enormous. But, and this is a big but, the risks are just as significant. That competition we just talked about is getting more intense every day. The stock's valuation is already so high that it's pricing in a ton of future success, which leaves very little room for error. And then you've got the immense challenges of actually building these futuristic projects, dealing with regulators, and navigating a pretty tough global economy. So it all boils down to this one single fascinating question. Is Tesla, at its core, a car company that's hitting the natural limits of its growth in a market that's getting more and more crowded? Or is it a technology and AI company that's on the verge of its next great breakthrough? The answer to that question will decide whether the next decade of this roller coaster is anywhere near as remarkable as the last.